Hello, and welcome back to our weekly Market Insight series brought to you by the Capital Markets Trading Desk right here at SunWest Mortgage Company. It's your girl Buffy, so let's just get right into it. It was a volatile week as investors navigated conflicting economic data and trade developments. On Wall Street, stock futures pushed higher after quarterly earnings reports exceeded expectations. Treasuries ended a 5-day slide on Wednesday after wholesale data boosted hopes that the Federal Reserve may be able to proceed with cutting interest rates. The Consumer Price Index rose 0.3% in June, bringing the annual inflation rate to 2.7%. This was the largest monthly increase since January. Core CPI, which excludes food and energy, picked up by 0.2% month over month, while climbing by 2.9% over the past 12 months. Both were slightly below expectations. The reading indicates that tariffs might be starting to drive up prices in certain categories. Energy prices and the cost of shelter drove the bulk of the increase, while food prices rose 3% on an annual basis, surpassing overall inflation. Other categories that increased in prices include furnishings, medical care, recreation, apparel, and personal care. Wholesale inflation was flat in June, offering a conflicting signal about the impact of tariffs on price levels. The Bureau of Labor Statistics reported that the June Producer Price Index was unchanged from May's upwardly revised 0.3% and was up by 2.3% from a year earlier. Both measures were below expectations. Core PPI also remained flat from May and was up by 2.6% from June 2024. Consumer prices and producer prices do not always move in tandem, although producer prices can offer an early look at where consumer inflation might be headed. In its Beige Book report released on Wednesday, the Federal Reserve indicated that economic activity in the U.S. increased slightly from late May through early July. However, the outlook was neutral to slightly pessimistic, as only 2 districts expected activity to increase and others foresaw flat or slightly weaker activity. Business uncertainty remained elevated, causing continued caution. They also reported widespread price increases among higher tariff-related cost pressures, which have been passed on to consumers. MBA mortgage applications fell for the first time since the week of June 13th after dropping by 10% during the week ending on July 11th. Applications for refinance loans fell by 7% from the previous week, but were up by 25% compared to the same week a year ago. Purchasing activity fell by 12% week to week, but was still up by 13% compared to the same week in 2024. Last week, mortgage rates edged higher for the first time in 2 weeks, with the average 30-year fixed mortgage rate increasing to 6.8% from 6.7%. The National Association of Home Builders Wells Fargo Housing Market Index inched up by 1 point to 33 in July. The figures were a slight boost after June's reading of 32 marked the lowest reading since December of 2022. Even so, builder sentiment was still well below a reading of 41 a year earlier and has now been in a negative territory for 15 consecutive months. 38% of builders reported cutting prices in July, while the share of contractors using sales incentives was unchanged at 62%. Americans continue to spend as retail sales jumped more than expected last month, offering some relief from mounting anxiety over the health of the consumer. The Commerce Department reported that retail sales rose 0.6% in June, rebounding from a steep 0.9% decline in May. Although part of the retail sales increase may reflect higher prices due to tariffs, rather than stronger consumer demand. U.S. import prices rose less than expected in June after advancing by only 0.1% during the month. Economists were expecting prices to increase by 0.3% after dropping by 0.4% in May. Compared to the same month a year ago, U.S. import prices tilted 0.2% lower. Export prices bounced back and increased by 0.5% following a 0.6% fall in May. Export prices increased 2.8% from June 2024 to June 2025, indicating the highest reading since January. Last week, the number of Americans filing new applications for unemployment benefits fell to the lowest level since mid-April, pointing to a resilient labor market. Initial jobless claims fell by 7,000 to 221,000 for the week ending July 12th. At the same time, the number of people receiving benefits after an initial week of aid increased by 2,000 to 1.9 million during the week ending July 5th. Continuing claims have been trending higher and are hovering near the highest level since 2021. And well, ladies and gents, that's it for the week. As always, stay locked in so you stay current on market news. Also, of course, if you like the video, please hit the like button, share, and subscribe. Hit that notification bell so you know when we upload a new video. My hope is to always keep you in the know of the latest world news and, of course, our pricing incentives. Have a prosperous weekend, everyone. Buffy, out.